To all our viewers, followers, and investors from the GoldenPi community, a very warm welcome to all of you. I'm Abhijit Roy, co-founder and CEO of GoldenPi, online platform of lakhs of users for their fixed income investment needs. This is the 17th episode from our Industry Speak series. For an intro, here we invite the market leaders across various industry verticals and we get into deep discussion with the promoters, the CXOs, understand the business model of the company, the financials, and in a way, how they are impacting the financial landscape of the country. With this, we intend to empower our viewers with information so that if there are investment opportunities, you can take an informed decision. Today's discussion is going to be with the market leader in the automobile financing industry, Muthoot Capital Services Limited, or MCSL in short. Ladies and gentlemen, I'm truly delighted to invite our guests to this discussion, Mr. Mathews Markose, who is the CEO of Muthoot Capital. I'll give a bit of introduction. Mr. Mathews Markose is a banking professional with hands-on experience in retail liabilities, branch banking, retail assets, and SME business. He's got over 26 years of illustrious experience across multiple banks such as HSBC, ICICI Bank, Kotak Mahindra Bank, and ISAF Small Finance Bank before he joined Muthoot in the role of CEO. He is a prudent banker who focuses on building a healthy top line with a sharp focus on profitability. Mr. Mathews is known for his collaborative management style and is a very strong people's leader. Along with him, we have Mr. Ramandeep Singh, who is the CFO of Muthoot Capital. Mr. Ramandeep brings to the table 11 years of banking experience across core financial operations such as financial planning and control, treasury management, and NBH refinancing, to name a few. He has been driving the company financial operations with finesse and is pushing for exemplary outcomes from the teams. Mr. Mathews and Mr. Ramandeep, a very warm welcome to both of you.
Thank you so much, Abhijit, and good evening, all the viewers. Thank you for having us here on the platform. Thank you.
Thanks, Abhijit.
So let's get started with some deep dive discussions about knowing Muthoot Capital as an entity and how you are disrupting this space. I know that Muthoot Capital was started in 1994. It's over 3 decade old company, right? Pretty much a market leader in this space. But the question is, we would all be very eager to know who were the founders of this company and what was the philosophy with which they started this company and what was the problem that they wanted to solve.
Okay, so thanks once again, Abhijit. Let me start by giving you a background of the entire group. So, Muthoot Group is a 137-year-old group, and it was started by a gentleman named Mr. Nayanan Matai, and he had 4 sons. All of them hived out into various big businesses. So we have the Muthoot Red, we have Muthoot Blue, we have Muthoot Mini Muthoot, and Muthoot Mercantile. That was about 2 generations back. Our founder was a gentleman named Mr. Muthoot Papachan, and he founded Muthoot Papachan Group, which is today popularly known as Blue Muthoot. So we've been in the news recently for signing up SRK as our brand ambassador. So you would be hearing more of us on that lines. But MPG Group has 4 large NBFCs. The main company, the flagship company, is called Muthoot FinCorp, which is predominantly into gold loan business. 96% of the portfolio is gold loan. The next company is Muthoot Capital Services, which is ours. We are predominantly an automobile finance company. Then we have Muthoot Microfinance and we have Muthoot Housing Finance. So between these 4 NBFCs, we almost cover all the products in the lending space, most of it rather. Coming to Muthoot Capital Services, Muthoot Capital Services was the first listed company in the entire group. We were formed in 1994 and we got listed in 1995. And this is our 30th year in business. We started into serious two-wheeler financing business somewhere around 2008, and ever since we have seen a year-on-year growth in our AUM, and we exited March with 2,100 crores of AUM. That's about the group. Of late, so over the last 1 year, we have seen a completely new management, including me as the CEO, Ramandeep as the CFO, and our almost entire top management team is today about 1 year, 1.5 years old in the system. And last 1 year has been really exciting. The growth has been really good, and yeah, we are today diversified into multiple products. Okay, from a single product two-wheeler company, today we have five products that we offer, four on the lending side and one
So
on
I'll
the
come to those.
investment side.
Yeah,
Yeah.
I would want to, I would want to dig deeper, double click on each of these areas
Sure.
so
Sure.
that our
Sure.
viewers have a holistic understanding. But before that, that very interesting point that you mentioned, Muthoot Blue, right? The way in which the
Yeah.
entire country knows about Muthoot Capital, right? So what's this about this blue color? What does it signify for you?
Blue stands for belief. So, in fact, our founder had a very, very strong, focus on the what do you say, as integrity and trust that people should have. So he always maintains, and even our current set of directors and promoters always mention that trust is the only thing that keeps you in business. If you lose that, especially in the world of finance, the biggest thing is trust. So our founder, Mr. Papachan, used to say, if somebody has, and of course, this I say with the background that we were a company formed in Kerala and had much of our operations in Kerala for a large part of it. So Mr. Our founder, Mr. Papachan, used to say that if one had 10 rupees as savings, one would invest 5 rupees in SBI, 3 rupees in Federal Bank, and 2 rupees used to come to Muthoot. So that is the kind of trust people associated with this brand, and we live to build on that trust. We will not do anything that will fail any of our customers on the trust factor. So that is very, very
Great.
important. That's a virtue that we hold very, very close to our heart.
It's great to know about this, about the founding stone or the belief of Mr. Muthoot Papachan, and that belief that the company is now taking forward, right, of building trust before customers. And as you rightly pointed, right, at the end of the day, it's a customer's money, it's a customer's trust which helps you scale, right? Now, moving on, would want to double click on the business model for Muthoot Capital. So, Mr. Mathews, if you can, color around the business model that you have built. What is the current business model? And would also want to understand if that has undergone any change from the time it got started to now. Has there been any significant changes to that?
Okay. So as I mentioned earlier that we were incorporated in 1994. Initial part of the initial period, we are acting as a DSA of multiple banks, but we started our own financing from about 2008, and ever since we've been a very, very strong player in the two-wheeler space.
Two.
So we continue to be a two-wheeler player till about 2016-17, and then we started our used car business. When we started that business, that was around the time when we had massive floods in Kerala, and as I already told you, Kerala used to be one of the biggest markets. 2018, you had Kerala floods, and then back after that, we had 2 years of COVID. So again, the business slowed down, both two-wheeler as well as used car. So basically, last year was 1 year when we really kickstarted the entire business once again, and we hit the growth trajectory last year. But what we also did was that we realized that we've been a single product company for far too long, and it was also highly risky to be in only one product segment. Two, we also had a huge opportunity in terms of our group company Muthoot FinCorp having 4,000 branches and almost close to 1 lakh walk-ins per day. And their requirement was not just a two-wheeler loan. They also looked at used car, CV, all these as a product line, which they wanted to graduate to. So in accordance to the need of our customer segment, we hived out into multiple products. So today we have two-wheeler loan, which is our core business. We have used car loan, we have created a vertical for used CV business. We have a product called loyalty loan, which is a top-up loan that we give to our existing loyalty customers, and we have fixed deposits, which is our investment product. So we have 5 product lines running in tandem now.
Got it. Got it. So for our viewers, if I have to quickly summarize, right, Muthoot Capital started in 1994, 30-year-old company. Mr. Muthoot Papachan is the founder of this company. The whole model started with being a DSA in 1994 till 2008 when two-wheeler loans own financing started from Muthoot Capital. And then 2016-17, Muthoot Capital also got into the used car business. Right now, in 2023 onwards, there are multiple business lines in Muthoot Capital. Two-wheeler financing is a primary one, followed by used car financing, then commercial vehicles, and Muthoot Capital also has got fixed deposits. That's a great news for our viewers. So, I think
That's
out of 5,000 odd NBFCs that are registered with RBI, I think only 24 or 26 NBFCs have the permission to have their own fixed deposits. And Muthoot Capital is one of those coveted few who have that permission that I understand.
absolutely, absolutely. That's a very, very premium product to have today as an NBFC. And that
Absolutely.
also requires a lot of compliances. So it's actually a feather on our cap that we have that license.
Right. So, and my next question would be, to understand about how are you sourcing your customers, right? And then if you can lay out once they are into your ecosystem, what is the trajectory through which a customer would go in, let's say, to avail a two-wheeler loan, right? What will be the documentation till the point, he gets the credit, he or she gets the credit for financing this, the entire trajectory, and how much time does it take?
Okay, so traditionally, two-wheeler business has been a dealer-driven business. So when somebody wants a two-wheeler, he or she walks into a two-wheeler dealership nearby his or her residence and selects the vehicle, and the loan process also starts from the dealership. And typically, about 55 to 60% of the two-wheelers get sold on finance. So the journey happens through the dealership. But Muthoot has been a trendsetter in the sense that dealership, of course, used to be a channel because if you are into two-wheeler finance business, you can't ignore that channel. That happens to be the biggest channel. But as I mentioned before, Muthoot FinCorp, which is our flagship gold loan company, has 4,000 plus branches spread across the country, and we have close to 1 lakh customers walking in every day to these branches to take gold loan or avail some other services. So that is a very, very good point of sale for us, and we have actually capitalized on that. We have our two wheelers displayed in the branches of Muthoot FinCorp, and we tie up with local dealers, and we offer attractive schemes to the customers who walk into the Muthoot FinCorp branches. So about 18.5% of our business comes through Muthoot FinCorp branches.
Got it.
So, so that is one place where we are kind of unique, which many other financiers in this space don't have. Three, we are also building a digital journey where
Mhm.
a customer uh, can engage with us digitally. So
Mhm.
the right from the lead generation, which happens through digital platforms, either social media or our website, or we have tie up with certain marketplaces from where we get the leads. From that lead generation till end-to-end closure, it's a completely digital journey. So that's the third channel. In terms of how long does it take? Yes, today we have a loan origination system which can give an approval in 10 to 15 minutes. So everything is digital. So one comes in and keys in the details, all the validations of KYC and credit worthiness check, and everything happens digitally over a period of 4 to 5 minutes. And an approval can be given in less than 10 to 15 minutes. A dealer payment can be given in as early as 30 minutes to an hour. Payment can be released. So that's the speed at which we execute this business
Got it.
today.
So per day, how many loans would you disburse on an average?
In a month, we disburse about 15,000 to 20,000 loans.
Got it.
So
Got it.
that's the
And
monthly average that we have. So last year, this used to be around 8,000 to 9,000. This year, we have started off very well. So that is crossed 15,000. And typically, Q3 happens to be the biggest period for this business because of festivities across the country, Diwali, Dhanteras. It starts with Onam in Kerala, and
right.
Kerala is a big market for us. And we hope to touch the 30,000 mark by October, November this year.
Wonderful. That means 3,000 loans on an average per day.
Yes.
Great. So, the next thing would be what are the demographics of these customers, right? And these 4,000 branches that you mentioned, right? Is this concentrated across Kerala or how are you spread across the country? And what kind of, borrowers are you seeing who are walking in to, borrow the two-wheeler financing loans or, used car loans, all those loan facilities
So
that's there.
two-wheeler customer is a typically middle to lower income segment. They are the ones who take the two-wheeler. And in terms of geographical spread, we are present in more than 20 states. And
20.
these 4,000 branches of FinCorp are also spread across these 20 states.
Got it.
So there's an even spread. There used to be a time when our concentration was more towards south. So Kerala used to be our biggest market, followed by Karnataka. So about 65% of our business used to be skewed towards the south of India, but not anymore. So now we are evenly spread, and all markets contribute as per their potential. We have anything between 5 to 10% market share in each of the markets that we operate in.
Got it. So I'll just summarize for our viewers. So, customers basically are acquired through four channels. One is through the traditional one, which is dealers, I mean auto dealers, the two-wheeler dealers, wherein a customer can step in, can choose a vehicle and choose the loan from Muthoot Capital, and it gets processed. It's also through the walk-ins at Muthoot FinCorp, 4,000 branches spread across 20 states in the country with 1 lakh walk-ins every single day, which is a phenomenal number. Digital acquisition channel, which is the third one, wherein you can actually go to Muthoot Capital's website or app, I believe, and you can apply for the loans with your documents. Loan processing time is around 10 to 15 minutes, and the loans are disbursed. Great. Now I think it's the discussion is primed to move towards out of this entire business, right? How are the financials of Muthoot Capital, looking like? So my next question to is to Mr. Ramandeep. Uh, so if you could explain about the revenue model of Muthoot Capital, and how are you scaling up on various metrics, on the various financial metrics of the company?
Okay, thanks, Abhijit. So I'll just take you through, how our, how we have closed the financial year, right? In last financial year, we had a client base of approximately 4 lakh plus, outstanding clients. Out of that, for that took our AUM to 2,100 CR. Therein, with a total financials, if we say that the company is having asset size of 2,300 CR, the company is having a borrowings of approximately 1,600 CR. So now, if we see that if we see the total health of the company, when we posted a profitability of 122 crore in last financial year, the company had 2 years back the company had a one-off loss of 160 CR, wherein the company, as far as the revenues are concerned, we are basically we are basically having a revenue model divided into two parts. One is basically the interest income. Second is the fee. Interest income is the income wherein we basically accrue, or we basically take all the incomes that has been accrued on our two wheelers, on our used car, all the incomes which we earn from the from our co-lending partnerships, from everything. Then there is a fee component which we take. Basically it's more of a processing fee which we take from the customer, that ranges between 1.5 to 2% on an average. So that with that, the company is having two main revenue streams. Other than that, we do have very small incomes, like income from treasury, income from fixed deposits and everything. So that contributes approximately 5% of the total income. Then in last financial year, the company has been able to add 1,400 cr of additional sourcing, which helped the companies in acquiring 1,75,000 new clients over the last financial year itself. So which was something which we have not done in last 3 to 4 years. As I said, 2 years back the company had a one-off loss of 160 crore, which we have been able to recover, and posted a return of asset of approximately 6.35%, with a return of equity of 22.25%. And the company has been successfully able to post EPS of 74.58 rupees. So that is basically this. It's all these numbers, strengthens the company's branding, and where we are heading towards in all our parameters, whether in terms of my incomes or in terms of profitability of the company. The company has been able to grow throughout the last two financial year. Debt to equity, if we talk about last two, if we talk about the outstanding one, 18 months back the company is having a leverage of 4 times. Because of the increase in the reserves and surplus, the company have been able to bring it down to 2.8 8 times itself. So therein the company has worked on two parameters. One, yes, on the fresh sourcing which we have done, which helped the company in increasing its interest income. The total growth which the company has posted over the last financial year was approximately 8.5%, whereas 25% of the growth which we have recorded from H2 of the last financial year vis-a-vis the H2 of FY24. So this is what the overall growth of the company, with the total shareholder funds which we have reported in the last financial year, stood at 612 crores.
Got it. Got it. So, what is the total customer base that you have as of date, wherein you mentioned 1,75,000 new customers are acquired last year itself, fresh new
Yeah.
customers, right? So, what is the total customer base that you have?
So total customer base, we have approximately 4,50,000 as we speak.
4,50,000. Great.
Yeah.
That's a pretty stellar number. And if I recollect correctly from all the metrics that you mentioned, so total AUM of 2,300 crores, right? Last financial year, a profit of 122 crores. A debt to equity ratio has improved tremendously from 4 times that it was last to last financial year. To last year, it was 2.8x, right? Because of a lot of cash inflow and of the revenue recognition that you have been able to do. And earnings per share standard 74.58 rupees, healthy value, right? So these are
Yeah.
significant figures that viewers should keep in their mind, right? And the income source, basic question that Mr. Ramandeep explained so well. Two basic income sources, very clear business model. One from the interest income that you earn by lending, and the other one is a fee component, processing the loans at a rate of 1.5% to 2% of the loan value.
Hmm.
Great. How about the NP of the company? For any NPC, that's a standard question. So if you can share some light on that.
So yeah, I'll just give you a brief that post COVID, the company has taken a hit on the NPA, wherein we had an NPA of total of 535 crores. As far as outstanding is concerned, that 535 cr of number, which has been brought down to 188 crore precisely as of March end. We can say that the in percentage term, the company was having 25% NPA. If we take the financials of last 2 years, that those NPAs have been brought down to 9.35% as my GNPA and 2.51% as my NNPA, keeping a PCR of approximately 75%, and and the company is following a ECL model with basically providing 42.22% at stage 3, with an additional overlay which the company is carrying in the financials of approximately 62 crores, that in case we need anything further, which wherein we need to meet the gap between ECL and the IRAC norm, we still have 62 crore as our additional overlay, which is there in our financials in order to meet that. So these are the broad NPA numbers. Uh, just to brief it down further. In last financial year, the company has been able to recover 70 crore as a hard cash towards NPA. And there is a transaction of asset reconstruction which the organization has done, amounting to 235 crores, that too in the Q2 of last financial year. Therein, the objective was basically, to make sure that NPA, though we know that, we always knew that, this portfolio of 235 crores, is having some sort of, wherein we have been able to, we will be able to recover some sort of NPAs from that. And that happened because the 235 crore of portfolio, we booked a security receipts of 102 crores, which stood at March 31st at 63 crores itself, which signifies the kind of recoveries which the organization has done in the last 6-7 months, in terms of bringing it down the total value of security receipts. So therein, and then over and above, we did the hard cash recovery of 70 crores only in our NPA pool. So this basically shows that what kind of strength the organization is having in terms of recovering its NPA as well. Third most important thing which I want to share is all those GNPA and NPA which I spoke till now, all pertaining to pre-COVID era, wherein
Right.
there are some slippages which happened on in COVID. Post COVID, the portfolio which has been created by the company, therein we have seen a huge improvement. On a static pool basis of that portfolio, the company is not even having a GNP of more than 4.5%, which show the policies and the kind of sourcing which we are doing in last 18 or so months. That yes, the companies on the track which has been chosen by the company is right. And
Right.
the we have been able to source approximately 3000 CR in last 2 years. On that 3000 CR, we are not even having a GNP of more than 4.5%, right? So therein we closely track our NPAs, and once we'll be able to take call on our remaining portfolio of GNPAs, that what needs to be done, specifically the pre-COVID era portfolio. I think we will be best in the industry, specifically in terms of our GNPA and our NNPA number, because we are having a healthy PCR of 75%.
Fantastic. So,
Yeah.
two things. One, I understood from the way you outlaid the overall operations. You have a co-lending model, so you participate with the banks in co-lending to customers. Number one, and number two, you have been able to keep your NPA on the portfolio that got originated post-COVID times to a much better form. During the COVID, everybody suffered. That's across the industry, right? So that's an exceptional scenario. We should consider it out of discussion. But right now, what we understand is post-COVID era, the portfolio composition is in very good state. But that brings to a question, would be curious to understand how are you managing your collections? Because that is one of the most tricky area for any NBFC. How does your collection cycle look like? Your collection processes? Is it in-house, outsourced? If you could shed some light on that.
Yeah. So, in terms of cycle date, we do have one date for a month. Every month on 5th, our demand will be there, right? Though we that 5th date, the demand will be there, and then entire soft bucket of collection, the recoveries will be handled. The recoveries will be handled by the in-house team.
So you
So,
have
and the entire
in-house.
hard bucket we basically provide to the outsource agencies.
Got it.
Then, in terms of my efficiencies, my stage one, stage two, and stage three, my zero bucket efficiency stood at somewhere 97%, and my stage one, stage two, and stage three are somewhere ranging between some 75% to 85%. Which again, we can say that even if we have to compare, it would be some at par, or in some stages we are exceeding the industry's expectation in these buckets as well.
Got it.
As far as my hard bucket is concerned, wherein we generally outsource all these recoveries to agencies and all, we have been able to recover 7% of my total NPAs on the hard bucket, you know, at in a particular year. Which if we see that recovery rate as far as industry is concerned, that is somewhere between 3.5 to 4.5%. But if you see the hard cash recovery which we have made specifically in the last two financial year, preceding financial year, we
Mhm.
have we were somewhere around 8.5% and 7% respectively.
Got it. Got it. Moving on, moving to slightly larger set of questions around the company structure. So, a question to you, Mr. Mathews. If you can lay out what is the leadership team or the key members in Muthoot Capital and what kind of backgrounds do they have, so for the benefit of our viewers.
Okay, so our leadership team, of course, you have other than me and Raman is a chartered accountant, and he has worked in firms like Aviom, PNB Housing Finance, HDFC Bank, HSBC, and yeah, he's my right hand man, go-to man for all purposes. And then we have our CRO, Miss Uma Devi. She's also a chartered accountant, and she also has a wealth of experience with institutions like Yes Bank, Dhanalakshmi Bank. She's also been a career banker before her
Mhm.
stint with
Mhm.
MCSL. In our collection head is Suraj, who has been again an industry veteran. He has also worked in Muthoot about 10 years back. So it is his second stint. So he understands the Muthoot philosophy as well. He's worked with institutions like Bajaj Finance, Catholic Syrian Bank, Tata Finance. So again, an industry veteran. Our head of business is a gentleman, dealer business. We have divided our businesses, as I said. We have now five verticals. We have the dealer channel, headed by Arun Singer. Arun Singer is again an industry veteran with about 25 plus years of experience. He has worked with Bajaj, Tata, and his last assignment was with Wheels EMI. We have Sridevi as our head of alternate channel. Alternate channel, I mean the channel which takes care of the Muthoot FinCorp branches. So basically,
The physical
our sister
branches,
concern,
4,000 branches.
and the digital platform. She also is a career banker with 22 plus years of experience with institutions like Kotak, ICICI Bank, IndusInd, ISAF Small Finance Bank. She also incidentally heads our retail liability business, which is our deposits business. So she takes care of two businesses, which is the alternate channel and retail liability business. We have a gentleman called Sonu Gujral, who's been hired recently, about 3 months back. He heads our commercial vehicle business. Again, a long stint with Tata Motor Finance. Uh, then we have Sharad Shashikumar, who heads our used car business. He has been again a career banker and completely in car loan business with institutions like Kotak Mahindra Prime, Axis Bank, ICICI Bank, and all that. So people collectively, the entire leadership team would have a huge experience, and they have been there, done that. They are all have a very illustrious career in their previous stints, and they continue to do a good job here with MCSL as well. Together, we are building this business, and we are sure that we'll be able to take this company to much greater heights.
Yeah, absolutely. A very strong leadership team indeed. And I was counting the names of the banks across your leadership teams where, your leadership team has worked. It's close to over 20 of the, leading financial entities and the largest banks in the country. So understandably, a very deep concentration of banking experience at your leadership team. The next question is, with this prime leadership team, what are your long-term strategic goals? How you're looking to, scale up Muthoot Capital and, maybe go overseas to scale up your business? How does it look for you?
So we have now we've created 9 strategic objectives for ourselves, and this is not something which we want to achieve in the next 3 months, 4 months, 6 months. It's a slightly medium to longer term strategy, say 1 to 3 year horizon, and the objectives are build an AUM of 5,000 crore plus with a ROA of greater than 3%. As Ramandeep was mentioning, we already have a ROA of close to 6%. We want to continue maintaining ROA of that level and build, which is now we are at 2,300 crores of AUM. Building that to 5,000 crores means more than doubling the book in the next 2 to 3 years. And we want to grow the two-wheeler business and achieve a market share of 10% plus. We are in the range of 2 to 10% in various markets, depending on how deep we are penetrated. Then we, of course, want to become a multi-product company. We were a fairly single product company for a long period of time, two-wheeler being our only business. And then we started used car, which again we had to put our brakes on because of COVID. And now we can say that this year onwards we are a truly multi-product company with 5 products, which is two-wheeler, used car, CV, loyalty loans, and fixed deposits. We want to bring our alternate channel, which is our MFL channel, which I mentioned before, which contributes about 80% of my overall business. That should reach to about 40%. That's a core focus area. The advantage that brings in to me are two. One, of course, that it reduces my cost of acquisition by a great deal, because I'm talking about customers within the group. So I don't spend that much money going out and acquiring. Two, I don't need to be dependent on the dealer channel, because dealer channel tends to choose their partners based on who pays them more, etc., etc. Here, with 40% of my business coming from my own in-house channel, there's a huge deal of cost arbitrage that I will have. And three, I will be able to add value to my channel partners by saying that, hey, here 40% of this business I am bringing to your counter from outside, which will give me a much more strong footing in the dealer counter. So even if, as I mentioned, if I'm not very competitive on payouts at certain counters, I'll still be able to, have a large part of the counter just because I am giving them business from outside, which other financials may not be able to give. Fifth objective that we are working on is to build and grow on the digital channel. I had already briefed upon the digital channel that we have started. This is a new initiative. We have tie-ups with Marketplace. We are doing, we are getting leads from the website, and we have a strong presence in the social media. All the leads that come digitally to us, we try to engage these customers digitally and convert them. Sixth objective is to strengthen our asset quality. Raman already touched upon how we were able to bring down our GNPA from 25% to less than 10% in 2 years. This year, we will definitely exit with a GNPA of less than 6%. That's what we are doing on the asset quality. Leverage existing customer base, which also Raman mentioned that we have 4.5 lakh plus customer base. That is, we have between the 4 entities, we have close to 1 crore of customers between all the 4 NBFCs. We plan to leverage on the existing base by offering pre-approved, pre-qualified loans on two-wheelers and used car and CV to the customers across the group, so that again it reduces my cost of acquisition. It builds loyalty within the group, because I am able to cater to almost all the needs of my customers who has been onboarded by any of the group companies. Eighth objective that we have set out for ourselves is to become an employer of choice. With that, we mean that we should become a preferred, employer by all the employees should come seeking for us. We should be able to retain talent. We should be able to nurture talent. We should be able to grow talent within and give them opportunities. And definitely, with so many business lines coming up, we will need more people, more talent, and we will be able to give them opportunities. With a single product line, the opportunities were also lower. Now with so many product lines, that we will need so many regional heads, so many zonal heads, so many heads in collections, etc., etc. And the last point that we have set out for ourselves is to be an organization of constant renewal, which means keep looking at our processes, keep looking for opportunities of growth, uh, invest heavily in technology, invest in data science, and be an organization which is always trying to rediscover itself, be on the top of the league, be among the top players in the industry, and continue to add value to the shareholders. So these are the 9 strategic objectives that we have set out for ourselves, and the entire management team is focused on these objectives.
Great. So I'll just try to recap all that I understood from that you mentioned. 9 strategic objectives for our viewers. Please note. First objective is to have an ROA of 6%. Second is to improve the AUM from around 3,000 crores right now to 5,000 crores. Third is to have a market share of 10% up from anywhere, 2 to 10% is what it is now, to exceed that 10% limit. Fourth is to strongly become a multi-product company. The company has already diversified itself into 5 product lines or 5 revenue lines, right? Strengthening them. Getting a market share of 40% in the MFI channel, strengthening itself strongly on the digital channels to acquire customers digitally. So becoming a digital first entity, getting a GNPA below 6%, leveraging the customer base, basically monetizing the 4.5 lakh customer base that you have, right? So that cross-selling of products suiting their needs can be done, which immediately adds to the top line and the profitability. Eighth is a great point to be considered by any company to become the employer of choice. So, like great places to work, figuring out maybe on that list, right? So that people look up to Muthoot Capital for employment, right? To build their career over here, which I think is a great kind of a focus for any forward-looking company which is scaling up. And nine is a company which is continuously looking inwards to better itself, employ analytics and technology to keep unearthing newer opportunities and scale up. And any plans for foreign expansion over here?
No, not right now.
Got it. Got it. I think I'll move on quickly to the next question, and that is on on the market position. So the points that you mentioned clearly shows a very strong focus towards healthy top line, profitability, being able to leverage technology well to acquire customers faster, keep customer acquisition cost under control, right? So I think it will be the prime moment to know how are you looking at differentiating yourself from other peers who are situated in this same industry vertical.
Okay, so one way that we already differentiate ourselves is the fact that we have a big channel which is contributing to 18%, 18.5% of my business currently, which is the MFL brand channel. That is a channel which is not available to most of the other financials. If the top players are 99% of the business comes from the dealer channel alone. So, which is hugely being dependent on that channel, but we already get close to 20% of the business from an alternate channel, and that is what we plan to grow up to 40%, as I mentioned before, as a strategic objective. Two is to build on the digital channel, which is again, we would be one of the front runners. Today everybody is trying to go digital, but to what extent is the question. So we plan to we are coming out with a theme of bike home delivery, which means anyone who visits any of the social media platforms or approaches us through any of the digital platforms, they can get a bike home delivery by getting a sanction online and then choosing from one of our preferred dealer partners, and we will work along with the dealer to give a delivery of the bike at the doorstep of the customer. That's a differentiator. And third one is to invest heavily on data analytics. So while you were asking the question to Raman on collections, one point that I wanted to add on that was that today we have built scoring models in our collection, So we have a pre-delinquency scorecard. That scorecard predicts who is the customer who is most likely to bounce. So of all the NACH that we present, the customers get divided into 10 deciles, and the each decile shows some percentage of the customer who will bounce, and based on that prediction we align our collection strategy. The customers who are most likely to bounce, we start calling them rigorously from day one. People who are least likely to bounce, we just give a small nudge by reminding through an SMS. So it is not possible for us to call all the customers or contact all the customers because the numbers are very high. But when we use this strategy, there's only a specific set of customers whom we need to go to, and there is a huge amount of cost saving that we are able to bring in because of that. Similarly, we have built a roll forward and rollback scorecard. So at each bucket, so at bucket 1, bucket 2, we can predict which are the customers who are the most likelihood of rolling forward to the next bucket, and also the customers who are most likelihood of rolling back to the previous bucket. So based on that, we define our collection allocation strategy. So it is not that we blindly give it to certain agencies. The low hanging fruits are given to the telecalling agencies so that the cost is less. Only the hard customers whom we know for sure may not pay easily are the ones given to the best of the collection executives or the best of the collection agencies. So in that manner we are able to, you know, bring our costs down and also improve our success rate on collection. Similarly, we are working out for an origination scorecard. An origination scorecard is something which would predict the credit worthiness of a customer. So all financials look at a credit score at the time of giving a loan, but the difference is that two customers who are having the same credit score may
Right.
not have the same credit history.
Correct.
Somebody who is coming down from 900 to 750, and as on date is at 750, his credit worthiness may be coming down, whereas somebody who is coming up from 550 to 750 and is currently at 750, his credit is improving in the market. But when we look at a standalone credit score of 750, we'll think that both of them are equal, but it
Correct.
is not the same. Somebody coming up from 550 to 750 has a better credit track because his leverage is reducing in the market, his income levels may be increasing, etc., etc. Whereas somebody who's coming down from 900 to 750, his leverage may be increasing, he is finding it difficult to pay the EMIs, etc. So based on that prediction, we are now building a origination scorecard based on which we will be able to, you know, segregate the good from the bad much better than what many others are doing. So these are the investments that we are making in data science to differentiate ourselves from competition.
Got it. Got it. So a heavy deployment of technology to be a digitally first and completely technology driven company with sharp focus on bringing down the cost of customer acquisition, on getting a much more collection efficiency, right? Which adds to your top line. Great. I think it brings me to my last two questions. One is, as an NBFC, you would be heavily regulated by RBI. How are you managing this complex paradigm of regulations from RBI and the various compliances that needs to be followed as an institution? If you can share in brief, right? Yeah, that's
So
you,
we
Mr.
call
Mathews.
it as assurance function. So we have a very strong assurance function, and all of them are professionals from the industry. So we have our CRO, we have a chief compliance officer, all of them, and we have built a very strong mechanism where between our four NBFCs we have a quarterly meeting of the heads of compliance, heads of risk, heads of operations, and they discuss between them all the recent circulars that have been issued by RBI. And if one company is getting audited once in a year, all the four of our NBFCs would have got audited at various points in time, and we share the best practices, we share the audit points, we share how we share the best practices, we share how we can overcome some of the challenges. So these are all we have created those groups who will meet at various points in time and discuss on ways and means of improvement. So that's how our assurance functions work, and we are extremely compliant organization. Our directors, board of directors, all of them uh, lay a lot of emphasis on compliance. In fact, if you look at our set of independent directors, they are also very renowned people from the industry, people who have headed organizations like PricewaterhouseCoopers and from the very senior positions in State Bank of India, and so very people who have very strong financial as well as integrity. In terms of integrity, they are very strong. So we focus a lot of we give a lot of emphasis on compliance. And in fact, if you look at the last two RBI audits, we have nothing adverse against us, and all the points also have got closed. So compliance, we live, breathe, eat compliance
Got
to
it.
that extent.
Is there any audit score that comes with these assessments, or any audit value that RBI shares?
No, RBI has not given us any scoring so far. I think that is not their practice. But internally, we are developing a scorecard where our chief internal auditor has developed a score for each department. So that also is a part of our annual appraisals. We in our annual appraisals we have three sets of ratings. One is the individual rating, one is a department rating, and one is the organizational rating. So department rating will also influence the final outcome of the individual. So it is not that the individual meets his on his or her KRAs alone. He also needs to contribute to the overall KRAs of the department. Similarly, a department meeting its own KRAs, KPIs is not enough. The department should also work towards the overall nine objectives that MCSL as a whole strives for. So based on that, ratings are done, and in that, our internal audit rating, each department is rated on a scale of well controlled, adequately controlled, needs improvement, and unsatisfactory. So that keeps all the HODs on their toes, and they work towards, a well controlled audit. There is a negative marking also for a needs improvement and unsatisfactory audit on any of the parameters. So all of them are perfectly aligned and conscious of that.
Wonderful. Great to know that. So I think, for me and for all our viewers, we got a very nice, well-rounded knowledge about Muthoot Capital, parent entity 137 years old, and Muthoot Capital functioning for over 3 decades, right? Running a profitable NBFC with 122 crores in profit in the last financial year, right? And heavily technology invested, and a company which is striving to be the employer of choice. That's a great aspiration for any company which is looking to strive for the next century. So that's Muthoot Capital for you, for our viewers. Thank you, Mr. Mathews. Thank you, Mr. Ramandeep, for sharing time with us and giving us this great insight into the company that you have built and that you're running currently.
Thank you so much, Abhijit, for having us. Really appreciate.
Thank you, Abhijit. Thank you, everyone. Thanks, Nimish.
Thank you.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.